Rupee has hit a record low for the fourth straight session today. Rupee touched new lows every day this week and it closed at 79.84 per dollar. The global economic stress began from the war in Ukraine, and ever since the war started, Rupee has hit new lows over 25 times. Now, why is this happening? Why is the rupee going down? It's mainly because of investors selling off their investments in rupee and taking their money to dollar investments because of global recession fear. So they take their money back to currencies seen as more safe and stable, such as the dollar. Now, this has led to a record $29 billion foreign fund outflow from the Indian markets just this year. It's reducing the demand for the rupee while it's increasing the demand for the dollar, driving up dollar's rate to a two-decade high and naturally driving down the rate of other major currencies, including the rupee. But the worst might be yet to come. US inflation for June was at a four-decade high at 9%. The Fed might announce a 0.75 to 1 basis point interest rate hike to control this very inflation. That could escalate the foreign fund outflow, meaning that rupee will go down further. But what does a weakening rupee mean for you and me? Well, higher costs of all our imports. We now have to pay more rupees for every dollar's worth of goods we import, which means that prices for food, fuel, etc. all could rise further for all of us. It also means that you now have to pay more for your foreign education and your foreign travel. US education and travel has gotten 7% more expensive in just the last 6 months because of the weakening rupee. But there's an upside as well. It's a boost for Indian exports. However, India is a net importer of goods, so the cons might outweigh the pros in this story of the weakening rupee going consistently down.